This is a typical line chart, and when it moves erratically like this, it looks chaotic. You watch the price shoot up, only to buy right before it crashes back down, leaving you guessing where it will finally bounce or break. Underneath that chaos is a hidden architecture. The market moves between predictable floors and ceilings, known as support and resistance zones. We are going to set up your charting tools, draw accurate price zones, and use a simple trick to automatically check your work. The only thing you need to follow along is a free TradingView account. By mastering this specific skill, you eliminate the guesswork. You learn to read the historical boundaries of an asset, turning chart reading into a strategic and repeatable process. First, open TradingView. We want to look at a stock with a rich history, so go to the search bar and type Reliance Industries. Once your chart is loaded, bring your attention to the left-hand menu. This is where your drawing tools live. To make things efficient, click the star icon to favorite these tools: the trend line, the ray, horizontal line, horizontal ray, price range, and the rectangle. Notice the new floating favorites toolbar that just appeared on your screen. You now have quick access to exactly what you need. Right now, the daily chart is full of noise, but select a monthly time frame and watch as the daily chaos condenses into a clear long-term trend. This big picture filters noise, showing the historical boundaries of the asset. Starting your analysis on a macro time frame filters out the daily fluctuations, revealing the areas where buyers and sellers have historically taken control. Now, grab that rectangle tool from your new favorites bar. We are going to map these boundaries. Draw a box where the stock repeatedly peaked and fell. This ceiling is a resistance zone. Next, identify where the price bottomed out and bounced upward, and draw a rectangle there. This floor is your support zone, where demand takes over. When a resistance ceiling is finally broken, it flips to become a future support floor. The price line breaks completely through the upper resistance rectangle. It arcs back down to touch the top edge of that exact same box before bouncing upward. This return bounce confirms the old ceiling is now holding as the new floor. Treating these areas as thick rectangles rather than thin lines gives the price room to breathe. This prevents you from being faked out by minor price fluctuations that briefly pierce a single line. Now that we have our macro zones drawn, change your time frame down to the daily chart to examine the exact edges of your zones. This is where accuracy matters. Entering a trade prematurely on a false breakout is a common trap. Look at the anatomy of this candlestick. Notice the thin vertical wick contrasted against the thick, solid rectangular center, known as the body. A wick that merely touches or spikes past your resistance zone is just a temporary test of that price level. It is not a breakout. For a true breakout, the solid daily candle body must push definitively through the horizontal resistance zone and close completely above it, just like this. Waiting for the daily body to close confirms the move is real, protecting you from being trapped by temporary market swings. If you're unsure if you've drawn your zones correctly, click the Indicators tab at the top of your screen. Search for a specific indicator named Support Resistance Channel and click to apply it to your chart. This built-in tool automatically calculates and projects historical support and resistance zones based purely on the raw price data. When we toggle the automated indicator on and off, you can see our manual zones overlap perfectly. If your manual boxes look significantly different from the indicator, take a step back and reevaluate the historical peaks you selected. Using this automated tool as a temporary check accelerates your learning. It builds confidence until you can trust your own eyes to read the charts. The chart is now a mapped environment, showing the specific levels where the market is likely to react. You now have a customized workspace and a reliable method to identify the historical boundaries of any asset. Here is your homework. Pick 3 new stocks. Start on the monthly time frame, draw your zones manually, and then use the validation trick to check your work. Mastering these historical boundaries prepares you for the detailed entry patterns we'll cover in the next lesson.